Hey everybody, hey traders, Chris Pulver here. Welcome to the Weekly Outlook. It is Monday, the 21st of December. We have a holiday shortened week of trading from the 21st to the 25th. New York Stock Exchange will be closed at 1 p.m. Thursday and all day Friday. Most of us work week wise are packing up 5 days into 3. I myself am on some PTO or paid time off for this week and next week to decompress a little bit, but I'll be watching the markets and kind of wrapping up everything from the investment side of things this year. And overall, it's been a pretty interesting year, of course. I'll talk about that in a little bit. But let's dive into it. There's a lot of stuff to actually talk about this week, so I'm going to go ahead and get myself out of the way here. I thought this was pretty fitting. Apparently, we have a new strain of COVID. Lockdown measures going into full effect in most of London and southeast England. And here we have some other important highlights for the week. Over the weekend, U.S. lawmakers and Congress passed a $900 billion stimulus plan. That includes direct payments to individuals. Most people will be receiving something to the tune of $600 per dependent, per child, depending on how much you made in 2019's tax year. An additional $300 in unemployment benefits per person. I'm just going to read a couple other highlights here from my Morning Brew newsletter this morning. $300 billion for the Paycheck Protection Program, which supports small businesses. And there was not necessarily a misallocation, but a very small percent of small businesses actually received the PPP back in March's rollout. So hopefully this will go to who needs it. Another $15 billion injection to help airlines rehire over 32,000 workers who were furloughed in October. Plus more for airports and air travel related industries. Amtrak will receive a $1 billion injection and public transit systems will nab another $14 billion. So travel industry again with restrictions, new strain of COVID, lockdowns once again. Travel industry is going to be hit nice and hard. We will see how that affects airline stocks, possibly energy stocks. And last but not least, $25 billion for rental assistance, plus the extension of the federal eviction moratorium, where hopefully we're not putting people out on the street, kicking them out as of January 1. So that's going to be an extension on that. So as I mentioned earlier, this was a compromise, call it the great compromise between Democrats and Republicans to get something done. So kudos. I thought it would be the case, and I think this is also why the markets have continued to push higher in hopes that, hey, we've got a COVID vaccine rolling out. Hey, we're going to have a stimulus package, blah, blah, blah. In fact, so let's talk about that. Where were we last week? Last week's Dow Jones was pretty much flat. We finished negative 0.13%. With a close still above 30,000, which is important to stay above that level. Anything back below 30,000, in my opinion, is going to be a bit of a rattled market. S&P finished positive last week at 0.27% gain. NASDAQ, big tech, of course, leading the way, 2.34%. Bitcoin surging up 26.75%, breezing through that 20K mark, had highs up towards 24,000 over the weekend, and we've retreated a little bit, but cryptocurrencies making a big run and a big play this year. I believe Bitcoin overall is up over like 200% or something ridiculous like that for this year. On the year, NASDAQ is carved out. This is as of Friday's close last week. NASDAQ is up 42.16%, S&P up 14.81%, Dow Jones up 5.75%, gold up 24.45. 10-year Treasury notes down a ton. Oil down a ton. Still, obviously, oil recovered from zero to back up towards $50. But one thing I'm taking away, the way that I kind of measure myself against the markets is, can I beat the S&P? Can I beat the Barclay Hedge Fund Index? And I'm essentially right on pace with the S&P this year. However, it did not take me as a trader to go through a 40+% drawdown or 35 to 40% drawdown in order to make 14.81%. However, the stock market did, right? We had a 40+% correction in the NASDAQ, 35 to 40+% sell-offs on the Dow Jones and S&P. Dow Jones is barely eking out gains this year. If we finish at these current levels, Dow Jones stays positive around 5 to 6%, S&P around 14 to 15%. NASDAQ has had a crazy year with a 40% downside, 60% upside, closing at 42+% gains. We'll see if that drags on for the next couple of weeks. I mentioned Barclay Hedge Fund Index, well, I want to show you that really quickly. So this is another index that I measure myself against. This is the Barclay Hedge Fund Index right here. As of year to date through November, 7.27% for over 2,400 funds around the world. So have I beat that? Yes, I nearly double that. I am right on pace, like I said, of the S&P 500. So, I would say that this year for me has been a steady success, consistently profitable. In fact, I only had one flat month and 11 solid months. It was a fairly boring year in my Forex portfolio. It was a really exciting year in stocks. It was a super exciting year in cryptocurrencies. So overall, I have a lot of great takeaways from this, but as of December 31st, none of this means anything because this is just another year's performance. Next year's a brand new year. And I actually had a talk with my best friend last night who is, he's a doctor, he's a rational guy, he likes the research, and he cannot figure out the stock market. And I said, it's not your job to figure it out. If you want to be a passive investor, it's your job to just play the long game. If you've got cash and margin on the ready, then wait for a good opportunity because right now at historical highs, irrational movements, disconnected correlations, things are crazy. So I'm essentially planning for the best, preparing for the worst. And this is now, a solid 2 to 3 years of me trading with one eye open, meaning that I am, really protective of my capital. I'm making sure that, my drawdowns are really tight. I'm trying to gain as much as I possibly can, of course, but managing risk. And, I think that one thing going into the next probably 3 to 6 months, maybe the next 2 weeks, I don't know. I mean, I'm still very much bullish on volatility. So on that note, I do want to take a look at a couple things today. So here we go into the charts. Before I do that, let me go into this official disclaimer. We understand there's risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose. Let's get into the markets here. I'll get my social media stuff in a little bit. So I want to get right into the charts. The VIX, this is the volatility index. I was looking at this range structure from the last couple of months. We had our September swing. We had our pre-election heightened volatility. We had our post-election. As the markets were rallying back up to new highs post-election, the volatility index got smashed back down. However, we are holding these higher lows. So I am still long the VIX. I'm still long VIXY, VXX. I'm looking for this to still go higher, even if this isn't something that goes to new highs, even if this is not something that gets back to March highs. I'm still looking for volatility to increase. Now, and this is what traditionally we see, if volatility does increase to these up levels or the higher levels here around $40, that's just intermediately, then we should see a little bit of a dip in the stock market. So if I go to the SPY, look and see where we're at today. Look at today's candle. Today is Monday the 21st, and look at today's candle. We are, and again, we're not making any massive bearish movements, but we are down from the highs. So was all of this lead up into the old adage, buy the rumor, sell the fact? So we had, post-election movements where just everything was running. Didn't matter if it was Biden president, Trump president. There was obviously a lot of uncertainty and indecision and drama around the U.S. election, but the markets were pretty much pricing in COVID vaccine and stimulus round 2. Now, pricing that in ahead of time is what that saying means. Buy the rumor, sell the fact. The rumor is we're going to have a vaccine. The rumor is we're going to have a round 2 stimulus package. So this is what's being priced in. And here we are now wrapping up the end of the year with 2 more weeks, and both of which will be holiday interrupted. We essentially have, 3 to 3.5 trading days this week and 3 to 3.5 trading days next week. Now, will we see, typical holiday trading, which is drifting, more of the same path of least resistance, or will we see something that is a disruptor, like tops forming bearish price action to push this thing back down? Again, let's get some perspective, okay? Lots of volatility this year. Artificially, and again, from a rational investor, this is an artificial mechanism. We bought our way out. We essentially deaded our way out of this crisis. Call it a health crisis, call it a financial crisis. This is not real. And to see how so much money was irrationally getting pumped into the markets, and it's like, you know what? Election, good election, bad election, who's president, doesn't matter, still goes higher. COVID vaccine, it's coming. Lockdowns, cases, third wave, doesn't matter. Like the market just keeps going. So, as I said, for the last probably month, as we got through the election and we rallied up here, I said we have the safety net right now to see stocks move higher. I'm not saying that it is sustainable, but I'm saying that we're most likely going to not disrupt this trajectory right now. So what am I watching? If there's any major disruption, I will be noting that. I am protective of my profits. It's been a solid, like I said, consistent year, great year in stocks, great year in cryptos, consistent year in Forex, and I'm happy with that. Doesn't mean anything going into 2021. It's a brand new year. So, strategies still work. My Keep It Seriously Simple video series is great reference. So I'll continue to trade the way that I trade. I'll continue to be risk averse. I'll continue to be consistent with my profits, protect them as I get them, and just plug away. And then from January to December of next year, hopefully I'm having the same conversation. Hey, there's a great 12, 15, 20%. Awesome. Let's do it again the next year. And just keep grinding. That's what trading is. So anyway, there is the SPY. We're down a little bit. We are currently down 1% plus over the day. If we look at the DIA, that is also down. So we had a pretty big gap to the downside with the open today. Bullish candle, but down off of Friday's close to Monday's open. So there is a downward level. As far as where we're at on the day for the DIA, it looks like we're down over half of 1%. The NASDAQ is also down over 1%. We had a gap from Friday's close to Monday's open. Look at this overall structure. If I'm looking at the NASDAQ, what would be an important level here? If I had a trend line drawn, let me see if I can just get a trend line that doesn't look like it's too aggressive here. Something like that, maybe. Okay, that's probably too aggressive. Let me just look at the horizontal levels. I think this is probably going to be better. If we see price closing back below 304, if we get back below 304 with some bearish candles, if we take out this low here at 300, remember, the QQQ has kind of this different structure than the S&P, different structure than the Dow Jones. But if we close back below this recent intermediate low around 299, or let's just call it 300, if we have some bearish price action closing below that, we could be putting in a bit of a topping pattern, head and shoulders or a crown pattern up here, and have a bit of a sell-off. And again, a sell-off isn't a bad thing. I think this is what bothers me so much about the markets is a correction of 3, 5, 7, even 10% shouldn't be seen as, the sky is falling and everything's breaking and it's panic to get a 10% dip, because what did we see this year? We saw Bedlam in March, and it was a 30, 40% sell-off, and it was like we needed a V-bottom. We need all these things to be happening to get us out of this rut, to get us out of this crisis. But I don't think we're seeing normal market cycles right now. And here we are at historical highs with a complete divide on who is doing well and who is not doing well. Giving the airlines and travel industry a lifeline doesn't mean they're going to survive. If anything, it's going to be more mergers and acquisitions. Those that have the balance sheet to do it will merge with others. I wouldn't be surprised if, Delta becomes like the largest airline and has to absorb JetBlue or United or American or Southwest. Like, I don't know. This whole landscape could change over the next 12 to 24 months. We don't know. But stocks will be affected. We will have this K-shaped recovery you may have heard of. Companies do well, companies do very poorly. So where do you fall? If I'm an investor, I'm going to be looking at this. I want companies that do well. And so that's what I've been telling traders in my room the last couple of weeks is that's my focus for 2021. If we have bargain shopping opportunities, great. But I think those opportunities come with more risk. I would rather, again, for the sake of my own portfolio and my own stress levels, I'd also rather see companies that if I invest in this company that has big market share, lots of cash, makes a lot of money, great. And has a competitive advantage, great. That's who I want to invest in, right? That's more long-term play. Will we find, opportunities off of crazy lows in industries that are hurt and downtrodden? Could they have some big recoveries? Possibly. But will we see a level of bailouts like we saw this year and keep extending that? I doubt it. So I think that 2021 may have a bit more reality attached to it, maybe a bit more normal attached to it. I suppose as a rational trader and investor that's been doing this for a long time, I hope that normal and reality actually start to reconnect with the markets versus this complete disconnect we've seen this year. So there's a lot that I'll be kind of mulling over through the holidays. But like I said, it's important that and on a good note, take a little mental break and get ready to start anew in January and do it all over again. So it'll be a very exciting year. A couple things that I'm really stoked about going into 2021 is increasing my automation. And again, off of my discretionary plans, I'm developing something. It's going to be part of my Flex trading room. I'm also going to roll this out with a mastermind series, and I'm calling it the Easy Price Action Pro. I've already showed this to some of my traders in the Flex room. This is currently in development, and hopefully I'll have a prototype in the next couple of weeks, and I'll be showing that to my traders in the Flex trading room, and hopefully have some traders join me in testing that and verifying everything is working and rolling that thing out, like I said, in my mastermind series and my trading room. So let's take a look at some charts for this week. Like I said, I'm essentially just watching the portfolio. Let me see where I'm at for some of my positions. I do have a couple of SPACs out there, those special acquisition companies. Let me actually check my account right here for Robinhood. I am looking at, I do have some pot stocks that are doing pretty well. Canopy Growth, GW Pharmaceuticals. My DraftKings is up quite a bit. I have two SPACs, BFT and CFII. Those are both long and up right now. I did take profit on FEAC. I did take profit on Kensington Capital. I did take profit on one other one as well. I can't remember. Oh, it was SPAQ that became Fisker. Took profit on those earlier. I'm also long SLV. I really like to play on being long silver. I like being long on volatility. I'm long Amazon. I'm still long Apple. I keep adding to those big tech positions. I'm long AT&T. I'm long Gilead. I'm long Good Prescription or Good RX. Let's see here. I am still holding some USO and actually no UCO. I'm still holding USO. I closed out for profit. So I'm going to hold on to UCO a little bit longer, just to try to get that one for a few bucks, maybe closer to break even. I'm still upside down in that overall position. USO, I got it in a much better time, and that one's been running nicely, and I closed it out recently on oil's little rally. But UCO, I think I got that one. That was the first one that I bought as soon as we had that big crash back in March in oil. And the way that that one's been repriced, it kind of hurt me in it. Plus, I got in a little bit too early. I was a little bit overexcited to buy that ETF. So anyway, here is the volatility index. I am still looking to stay long on VIX, VIXY, and VXX. So let's take a look at those really quickly. VIXY. There we go. So up off the lows, my break even on VIXY is around $15. So I'm currently positive on this, barely. But hopefully with a decent structure here, some trend line breaking, carving out some of these lows, even if this is just going to hold lows between, let's say, 13 and change to $15, if we just consolidate here and then have a nice eruption, either, like an end of year explosion in volatility or early January, early Q1 of 2021, a nice little upward move in volatility. That will be a nice little position to take some profit as well to kick off the year. As far as some of my Forex positions, I did have some profit that were taken overnight on Aussie CAD. We had some decent volatility. In fact, let me go into the currency strength chart. So this was today's volatility. So starting out with Sunday's open, we had some decent risk-off flow. So you can see here at the top of the food chain was the dollar, the yen, both of which have been very, very weak. And we had dollar, yen, euro, and Swiss, which are all considered safe haven currency pairs, were all the strongest. Now we have had, the exciting volatility get into the meat of the London session, that early New York session, and things have kind of settled down. In fact, volatility was really high. 140 on the upside, negative 120 on the downside. That's a big amount of volatility to see in a very short amount of time, especially for this week as we finish up our last full week of trading. This is going to be a holiday shortened week, but I'm really curious to see how the price action plays out, where volatility is. Do we have a risk on week, a risk off week? We will find out. So I did have some of this volatility around the CAD, which stayed pretty much level through the day, but we had a much weaker Aussie, a much weaker pound, a much weaker New Zealand dollar, and that allowed me to close out some good positions on Aussie CAD that I was short on, as well as New Zealand CAD that I was short on. I'm still actually short the Euro CAD. I'll take a look at that one in a little bit, and I expect that one to balance out as well, but the week is early, and we'll see how things balance out this week. Going into the charts, take a look here. So my Aussie CAD, you can see the volatility here. There was quite a long wick today. In fact, this high was 9738. The low was 9658. So for a currency pair that usually only moves about 40 to 50 pips, we had about an 80 pip day. That was enough for me to close out some of those positions. I'm still short overall on the New Zealand or the Aussie CAD. I still want to be short towards like 9300. New Zealand CAD, same thing. I'm looking to get short, stay short, and kind of build a position back up into this New Zealand CAD. Looks to me like we're going to balance out around 89.10, and that is right here. So I'm going to throw a little line on my chart. And so I'm looking for this level. If we come back up and retest the equal high, which is around 91.60, I'm looking for that level to fade, or maybe this slightly higher price will actually equal more disagreement between price and momentum. That divergence will allow me to take this correction back down into 8,900 or lower. We also have some really nice harmonic patterns that are bearish on New Zealand CAD. I am also short on the Swiss yen, which is at 116.74. This one has stalled a little bit, but really nice resistance around 117.70 and 11800. I'm hoping this one will fall back into 115 or lower, so I'm still holding short on the Swiss yen. This one will hopefully fall even lower than what I just said. I'm looking at 115 from a conservative profit level. Sell trade is around 117.50. I'm looking for 115 or lower, but ideally would be something, if we can hang on to this trade, I would love to see Swiss yen fall as low as 110 or maybe into these previous lows. This is 2019 lows several times actually. 2017 lows, so that's around 108 or 109. But I will take a sell trade here around 117.50. 115 is great. 110 is even better. Anything lower than that is just trying to manage my profit effectively. I'm trying to think anything else. I also am. I'm still long the dollar Swiss. Still long the dollar Swiss, 8857. We had some volatility again today, big poke to the upside, but it has retreated. One thing I look for maybe through the holidays is, we don't really have a sharp direction. We might have a bit of a squeeze today, but it settles back in and flattens out, and then we may turn this into an early 2021 recovery to the upside. So I still like dollar Swiss coming back to levels. Previous highs around 92.86. I really love this level. If you write this one down, 9350. In fact, I am primarily long dollar Swiss for that level. My break even is right around this 90.50 area. So if I can take a net position and take profit on 6 or 7 open trades towards 93.50, that'll be a nice profit injection for hopefully Q1 of next year. And then the Aussie New Zealand is another one that I'm holding some positions on. We're at 106.84. I've been telling traders that this is my plan, 107.50 to 108.25. If we get back into this little window right here, if we retest this high or come back into, move this out of the way, or come back into this little inefficiency and pocket, this is going to be a nice little profit level for me. So I have a position in at 107 and 104.50. If this gets back into 107.50, 108.25, I'll take some profit on that Aussie New Zealand. So let me do a little recap here. So stock-wise, stock portfolio, watching P&L. Right now, I don't have any massive running positions that are just sitting with trailing stop losses. I have taken most of my profit on my big positions, so any 40, 50% gains, any 100% gains, I think my biggest win this year was probably one of those special acquisition companies. It was like a 315% gain, but I've had lots of 50%, lots of 100%. Like I've said this for several weekly outlooks now. Like anybody with the courage to buy this year in stocks pretty much got paid. I'm not saying it's the right way to trade. I'm not saying that, but at the same time, who am I to complain about good opportunities? Who am I to complain about like the market doesn't make any sense? It doesn't matter. There is so much opportunity to make money this year in stocks. It's been ridiculous. If you essentially bought anything from March and April, it was like the greatest year ever. But I don't think that's going to be necessarily the new trend. I think that's something that was kind of an anomaly type year with, bear markets within days, bull markets within days, V bottoms, crazy extremes, disconnected reality. So we'll see how things kind of normalize over the next 6 to 12 months. I'm watching P&L levels. I have some good positions running in profit. In fact, I'm probably profitable on about 3/4 of my positions right now, and they're just kind of sitting there running. I will keep adding to Amazon. I'll keep adding to Microsoft. I'm going to probably stay out of Facebook and Google right now as they're dealing with a lot of those antitrust lawsuits. Traders may be looking for stuff to jump onto for the end of the year. I think, look, if you've had a good year, enjoy it, and let's start anew for next year. Let's circle back to this slide just to revisit some of the important bullet points for this week. Tesla joins the S&P 500 today, Monday the 21st. Let's put this in perspective. Market cap of $659 billion. Tesla is going to be the largest company to ever enter the S&P 500. This has the ability to completely reprice the S&P. Okay, and it says once it's in, this is from my Morning Brew newsletter here. Once it's in, it will be the 6th biggest company in the index. We've talked about this entire year carried by FANG stocks, right? Big tech has carried the recovery. Tesla now joining the sixth biggest company as far as market capitalization, sitting behind Apple, Microsoft, Amazon, Google's parent Alphabet, and Facebook. So is that good? I mean, congratulations to Tesla for being one of the wildest, stocks and one of the biggest success stories of the year. But with the increased volatility with a company and stock like Tesla, is joining the S&P going to make it more boring? Or is the volatility surrounding Tesla, with its vulnerability around good and bad news and around Elon Musk, will that make the S&P as a whole, as its market cap is so big, will that make the S&P as a whole more volatile? I don't know. That's something I'm going to think about going into next year. But I will say this, for those short sellers out there that were anti-Tesla, didn't do too well. So not worth fighting. Interesting story. But I think that underlying volatility is what makes it kind of a potential risk for the overall S&P, with it being so large and having so much market cap in the S&P 500. And it'll be something that I'm paying attention to for next year. Moderna vaccine granted emergency use authorization. Vaccines may be actually distributed as soon as today. Bitcoin last week broke the 20K mark. What's next? We had highs around 24,000. It's retreated a little bit off those highs, but what is next? A little bit of backstory on Bitcoin as far as the approval this year. We've had some big voices speak up and kind of add to the use of Bitcoin and blockchain technology, in addition to the endorsement. Jamie Dimon of JP Morgan Chase. 2017, it was the worst bubble known to man. Now there is legitimacy around it. It can change the whole industry, blah, 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 blah. So a complete 180 from opinion from 2017 to this year. Fidelity, PayPal, Square, MicroStrategy. It is now in, platforms like Robinhood and Webull, which have tons of stock users. You can buy just straight up cryptocurrencies. You can't necessarily trade them against each other, but you can add to that kind of digital wallet and holdings, which it's just becoming more and more mainstream. So I think that what's interesting this year is that the initial coin offering, if you remember that from 2017, like ICOs were everywhere. We had like 1,000 plus, like thousands of ICOs that were talked about coming to market. Now it's kind of going more mainstream, where I would say if you are trading cryptocurrencies, you're looking at some type of portfolio between, maybe 4 to 10 different currencies, some major, some altcoins, but you want ones that are large. You want ones that have, a story, that have something where there's legitimate backers around them. And keep in mind that it's still speculation. I'm up about 450, almost 500% in my cryptocurrency portfolio. All I've done is I've taken out my initial investment, and the rest is house money to let it run. And I keep saying the millennial lottery, like that's essentially what I look at it as. It is speculation. If Bitcoin goes to $100,000, if Ripple goes to $100, if Ethereum goes to thousands and thousands of dollars, fantastic. I'm so happy that I, again, took a chance on holding some cryptocurrencies. If it turns to zero, I'm okay with that too, because I have other means to generate profits as an investor in stocks, in Forex. And it'd be a huge disappointment, but for right now, it's really exciting. There's certainly a fear of missing out on cryptocurrencies. I think that's what's broken through the 20K barrier with Bitcoin. What's interesting though is like the pace and trajectory that Bitcoin has had. Of course, I'm wondering, will other cryptocurrencies catch up to that? Will Ethereum revisit the 2017, 2018 highs? All of them. Will they all revisit those highs from 2018? If so, awesome. Like, let the good times roll. If not, then we'll see what's going to hold them up. We'll see what the big storyline is for next year. But will we continue? Breaking above 20K, do we pull back, and 20K was previous resistance, now becoming support? Do we pull all the way back into 15,000? I don't know. I'm going to watch. Okay, what's next? There are studies showing that there is a new strain, a new mutation within COVID that hit a lot with the lockdown mechanisms going into the UK. Very strict measures throughout the UK and Europe. We have a COVID-19 vaccine, but will we have a mutation in 2020? Will we have the Pfizer, BioNTech, and Moderna vaccines? Will they have to turn into something else? I don't know this yet. But again, that's kind of gripping the markets right now for some risk off. I think that's why I showed that in the initial sell-off in our major indices in the US, as well as some of those currencies reflecting that risk off trading. And another little nugget from this week is the US tech hack. This could take months and months and months to sort out. This was SolarWinds, which is a company that provides cybersecurity to many major organizations in the US government. Russia hacking. So is it a narrative between, is it Russia that did it? Is it China that did it? But either way, it is taking months to sort out. It's a big breach, and we'll see what the ramifications are for that, as well as are there any punishments administered? Are there sanctions that go out? We don't know that. Like I said, this is a holiday shortened week. New York Stock Exchange will be trading through 1 p.m. on Thursday. It's closed all day Friday. Same thing for next week with New Year's Eve and New Year's Day. On a personal note, for the holidays, be safe, travel safe, take it easy, wear a mask, be part of the solution. Finish the year strong in trading. I was super happy to hear all the positive results and feedback from this year's trading room. Traders, again, like solid in forex, great in stocks and options, awesome in cryptocurrencies. Congratulations. It's a lot of work to be a trader. It's a lot of work to be an investor. And again, it, good or bad. Like, I hope everyone had a fantastic year. If it was a great year, awesome. Let's do it again next year. If it was a not so great year, if it was a learning year, if it was a year that you missed out, it's okay. Like, join a trading room, join a community, get with like-minded traders that are trying to do the same thing. We will do whatever it takes to be profitable. I don't care if it's in forex, I don't care if it's stocks, I don't care if it's options, cryptocurrencies, whatever is something of an opportunity, we will trade it. So I look forward to, enjoying the holidays, get a little mental break, decompress. Have a great holiday, everybody. If you need anything from me, you know where to find me. You can join my trading room. I'll see you all in January. Looking forward to a great year. You can leave a comment in the YouTube channel. You, of course, like the video, subscribe, all that good stuff. Click the notification bell. I will be getting a haircut for the holidays because it is long overdue. This office that you see here is hopefully going to be converted into more of a studio friendly, kind of video friendly office. So we'll see how that project works out the next couple of weeks. Like I said, enjoy the holiday. I'm still going to post a weekly outlook video next week on Monday the 28th, so make sure that you are subscribed to the channel. Click the notification bell so these premieres, when they go live, will hit your notification. And I will see everybody next week for the weekly outlook. Have a great Christmas. Have a great New Year's. And we'll talk very soon, everybody. Take care. Bye-bye.